What's going on today, YouTube? Today I'm going to talk about what it's like and how you can learn to trade stocks, how much volatility you can have, and how crazy it can be sometimes. So if you're new to my channel, I make investing videos, just trying to educate you guys on what happens in the market. This is not advice. I'm just showing you what I see, what I think. It's just my opinion. So first off, if you're new to stocks and you're new to the market, you have to be very, very careful. This is not something that you just go into and make money. If it was, everyone in the world would be rich. You have to be very careful. You have to know what you're doing and realize you can lose all your money. Yes, that would mean you'd have to put all your money on a stock and that stock price would have to go to zero, but it is possible. It is possible. And for the purpose of this video, I'm not going to talk about penny stocks out there. I'm going to talk about big companies like Amazon and Facebook. So to start off, we're going to look at a year-day chart. Now this is Amazon. Everyone knows, I'm sure you know what Amazon is. Basically an online store that everyone buys everything from anymore. It's like no one even goes to real stores anymore. They just buy it on Amazon, get it shipped to your house, be done with it. Okay, so yeah, if you don't know what Amazon is, Google it. So we're going to look at Amazon. Now if you're a trader, you're loving when this stuff's going up over the long term. Over the term of the year, this stock's gone up. Now realize, this is the first part of the stock market. Stocks do not just go up in a straight line. Each one of these candles, we'll zoom in a little bit. Each one of these candles represent a day time period. So one day it goes up, another day it goes down, down, down. Goes up, goes down. And stock prices, they just fluctuate. But over the long term, if you're looking for a good investment, you want something that keeps on trending up. Now these lines down here, they're just studies. They're just indicators to help you figure out how the stock is trending. Nothing is a sure ever tell sign. I have a video on indicators. Check it out. It'll be up here if you want to learn more about those indicators. But back to the video, you want to look for stuff going up. Now we'll look at a longer term. We'll look at the last 20 years of Amazon. You're a real happy camper if you invested down here when Amazon was trading at $54 a share. I mean, you're up 36 times whatever you invested at that time. That's great. It's fantastic. And that's what you are looking for if you are investing for the long term. But if you're looking for trading, you're probably looking at more short-term charts. So we'll look at 180 day 4 hours. So every candle now represents 4 hours. We'll jump into here. Like I was saying earlier, stocks don't just trend up all the time. They have little downfalls and then they go back up. But there is a big difference between something that looks like this and we're going to look at Facebook. Facebook, look, almost trending sideways. It goes down, it goes up, it goes down, and it goes down. Now right now, if you're paying attention to Facebook at all, Facebook is new to you looking at the stock wise. They have a lot of, not lawsuits pending against them, but there's data breaches, there was a lawsuit, and that is why this stock is dropping so much lately. But this is a much better example for what I'm trying to illustrate in this video rather than Amazon, because Amazon has done nothing but go up. Yes, it has a little hiccup, but the whole stock market has had a little hiccup at this time in the middle of October 2018. So if you're a trader, you're looking to buy, or you're looking to buy this stock for a long time. Regardless, if you're a trader or if you are a long-term investor, you want to buy stocks when they are going up. You want to buy stocks when they are on an uptrend, which would be back in here. Yes, it's not a very big uptrend, but it is still on an uptrend. And when I say uptrend, I'm talking about the stock price goes low, but it doesn't go lower. It keeps on going higher. Here is a higher low. This low is the same as back here, but this is a higher low. Higher low. And then, yes, it does fall, comes back to here, and it falls more. And that is why it is so hard to time the market. You have no idea what is going to happen, how a single stock is going to trend. There could be news come out where they got hacked, they got breached, the CEO did something. That's why people say it's impossible to time the market. If you're looking for long-term investments, you're not going to care about these dips. But if you're trying to buy a stock, you always want to look for these uptrends. And this is a lot easier than back here, where this stock is trending sideways. You want to look for these uptrends. Let's see, like, it's down here. It hit a bottom. It makes a higher low. makes a higher low, makes a higher low. It almost looks like a step. That's what you want to look for. Now, like over here, it keeps on making lower lows. It comes down to here, it goes up a little bit, comes down, goes up, but it goes up less than it went up before. Now it goes down lower than it did before. Goes down. It comes up, still lower than it went up before, and it goes down again. So if you're looking for a long-term investment, I mean, yes, this is more of timing the market, but if you're looking to get into a stock, you don't want to buy just because something is getting lower and lower. But that is my preference too. Like, I'm going to wait until Facebook. I do see a lot of value in this company for a long-term investment, but I'm going to wait till it shows positive momentum. I mean, I don't want to invest in something when it keeps on going down and down and down. Yes, it's a long-term investment, so if I'm thinking about keeping it for 20, 30, 40 years, I might not care as much. But with technology the way it is, who knows if Facebook will be around in 20 years? Someone can come out with a new app or a new social media that takes over Facebook. No one knows. So I hope you can see what I mean by higher highs, lower lows, and what that means, if it's on an uptrend or if it's on a downtrend. Now, for instance, when I say just because a stock goes down does not mean it's going to go back up, we're going to look at Sears, ticker SHLD. Now check out this stock. Over the last year, Sears, if you don't know what Sears is, it's a store that sells, it's an actual store. They sell clothes, they sell tools, and other like electronics. They sell a bunch of stuff, but it's a store. I don't know if it's around the world everywhere, but you can see they really, I mean, their earnings lost 2.64 cents per share. Here they had positive earnings, or I think those are probably estimated. Here they lost money, here they lost money, and their stock price just keeps on going down and down. We're going to look at a longer chart for them, like a 10-year chart. Sears used to be a very profitable company. We'll even look at 20 years. I mean, this stock price was the whole way up to almost $200, and now we're trading at 34 cents. So that's pretty much a penny stock. But what I mean, see, it's been on a downtrend. But yes, it might have been nice to get in this stock when it was on this little uptrend. I mean, you would have gained around 2x your money or so. But here it's on a downtrend. And now Sears, ever since it's been up in here, it's been on nothing but a steady downtrend. That's why I'm saying you have no idea. A stock could go to nothing. You figure you bought up at $123. You can see on the side over here. Bought at like $120. And then you're just waiting. You keep on buying because it's getting cheaper and cheaper and you think it's going to go back up. Well, they just filed for bankruptcy the other day. So this stock, unless someone buys it or takes it over, I mean, you're gonna lose all your money, and you could have just been buying just because it went lower. That's why it's so dangerous to just buy because it's going lower. As you can see, they keep on having negative profits, negative, 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 negative. Now filing for bankruptcy. So that's it for the video, guys. That's why I wanted to show you. Just never just buy something because it keeps on getting cheaper and cheaper. Yes, Facebook will most likely rebound because Facebook is one of the biggest social media applications of this generation. But just don't count on something going up just because it's going down. Wait till you have positive momentum if you want to get into something. That way, yeah, you're not going to get in. A lot of people are so worried about getting in at the exact right time, getting in at the very bottom, the best they could have ever got into to go back up. But you never know where that bottom is. I think it's more worth your while to wait till this shows positive momentum, like it's going up again. This just keeps on going down. Yeah, you might miss out on a 10-20% of those gains until it starts showing positive momentum, but it's a much safer investment. So if you like this video and it taught you something, drop a like down below. If you have any questions, comment. And if you like these kind of videos, subscribe to my channel. And I will see you in the next one.